Hi everyone, super excited to be here, lots of familiar faces. We did this last year and it was probably, one of the most well-received panels, so I'm very excited. We have basically the who's who of VC investing in games in Europe today. We also have Affan, who's, who has an incredible track record on the M&A advisory side. So it's a really great crowd of people that we put together. Maybe if I can just start by kind of asking you guys to briefly introduce yourselves. Let's start with that.
This one, yep. I'm David Lau-Kee. I'm a general partner of LVP, London Venture Partners. I've been investing in games with LVP for about 6 years now. But in reality, I'm a games guy. I started games companies, Criterion Software. I was making technology and games for about 20 years. So I've been around for a while.
Hi everyone, my name is Sean, and they did tell us this is going to be on YouTube. So hi Owen, hi Claire, hey guys. Nice. I'm with ProFounders Capital, so we are an early stage venture capital fund. We have worked with Affan on selling games companies. We've co-invested together with these guys on games companies, investing into games companies. We do early stage tech investments. I am actually not a gamer per se. I don't play many mobile games, but I love investing in mobile games because it's such an untapped opportunity still.
Hi everyone, my name is Matteo and I'm at Initial Capital. We invest in early stage companies, mostly gaming and entertainment. Before Initial Capital, I was at Google, first at YouTube, and then Google Play. I was leading the games team for Europe before joining Initial Capital.
I'm Affan, so other than being the only non-investor, I'm also the only one without a mic, but anyway. So yeah, I'm at Aream. We are advisors, so help games companies and other tech companies when they want to raise money, usually late stage financing and also on M&A.
Great, thanks everyone. So what I'd like to actually do is something a little bit different. I want to avoid the kind of always agreeing on things. So what I want to start with is actually, I have a list of areas that I want to ask you guys, and if you don't mind saying whether you believe this is a hype or if it's for real, then we can use that to kick off the discussion. So I will start by, and if you believe this is kind of hype, so please put up your hand. Hyper casual.
As in real. Sorry, hype is good.
Hype is like bad. So if you believe it's for real, like if I come to you and I say I have a hyper casual business, do you think, so hyper casual, everybody believes hyper casual is here to stay?
Oh, different question.
Okay. Okay, so, but you don't believe it's buzz, it's, okay. AR. Okay.
Oh, I like AR.
VR. Okay. Messaging games.
Yeah. This double negative's got us all confused.
I
don't like messaging games.
Okay, yes, okay. Ad tech.
As it relates to...
Like just in general, yeah, ad tech in general. Okay. Okay, so let's start with, I guess, messaging games, because that's one of the things that there was some disagreement on. And Sean, let me start with that. You believe that this is basically a hype and...
Yeah, no, I love the idea of instant games, hyper-casual games, which tends to be what instant messaging games are. I think it also depends on which market we're in, right? So
Sure.
I'm now speaking of the Western markets, let's call it Western Europe plus US. I just think the emotional mindset of players is not in that area. So it's a different use case. When people go into messaging right now, they're thinking about doing something different. And I think it's a big mental shift to move to the kind of instant-on messaging games.
Mm-hmm. And David, you didn't raise your hand, so...
No, I'm a big believer in its possibilities. I mean, I think that where I agree with you, Sean, is that in the West it hasn't quite developed yet, but I think that if we look to Asia, we can see the trends, the directions we're going in. And as an overall, you'll hear me say this a number of times, I think, today, But there are two key enablers that for us drive what happens in games, and that's technological changes and advances and demographic changes and advancements. And what we can see with messenger games is part of both of that, and particularly the demographic part of it. If you look at Gen Z and how they're choosing to interact with things, I think we find the type of experience they want from their games is going to be quite different from the experiences that, for example, I had when I was a kid. And I think that trends towards easier accessibility of the content. And I think messenger games falls into that, plus the scope for virality and sharing and so on. So whilst I agree that it's not there quite yet, I do think that over the next year, 24 months, I think that we're going to see some real winners in that space.
Matteo?
Well, there's not much more to say. I think I agree. I think I would add that so far platforms haven't really emerged in a way that they should have to support the experience and the discovery of games and also make them more engaging. But you're seeing some movements with Discord now launching their app store, game store, so a social platform that goes into content, and Facebook is always active on that, and others will follow. So I think there's a perfect storm that is happening from a platform perspective. So I think in 24 months it will be ripe for a new set of content to emerge.
And staying with you, Matteo, how about hyper casual? Like, nobody raised their hands, and everybody's talking about hyper casual. That was the case also last year. And you seem, bullish on it.
Yeah.
Can you speak more about what makes you bullish on hyper-casual? What are some of the...
Well, I think that today, if you look at, everyone has played a game. Every person in the world almost has played a game, and that's because of hyper-casual and casual games. And that's here to stay. I don't think, people have tried this, an interactive entertainment experience, and they're gonna drop out, and they will look for something else, for something new, so for something fresh. So I think hyper-casual, to stay relevant, will need to renew itself, but that is true for any genre or any category. But as a business model, as a way to create games that are quick to produce and cheap, and you can validate in a very efficient way, I think that's here to stay, and it's actually teaching other developers something that they took for granted before.
I was going to say, I hate to play the role of moderator a little bit, but I think if we think about business models of hyper-casual games right now, I wonder about how that ties into what Affan does, which is help companies that can unlock value. Because right now, the monetization, obviously on a per-game level, is not there, and the monetization overall is not there. You can't get that really deep ARPDAU sort of experience from these. So it's just a completely different business model as well. And I wonder, do people see as much value in those kind of games then, or those kind of platforms?
Yeah, I think I agree with you on messaging, because from a strategic standpoint, when it first came out, all the buyers that we speak to, I think were quite interested, and we're trying to see, okay, who are all these companies doing messaging games, and if somebody, becomes of scale, because I think everybody's interested in getting away from the Apple, Google, App Store, race. But I think because the business model didn't really prove out, we just haven't seen, kind of companies of scale come up, which I think on hyper-casual, I think, again, depends on which strategic you speak to, but there are people who see that, okay, these ad-funded models can really work. Maybe they don't have the long-term, or the high ARPDAUs and all that stuff, but, we saw in Gram Games, for example, which has, a piece of their business, which was hyper-casual, that, there was a lot of interest in that. So I think for certain buyers, that ad-driven business model is quite viable. The messenger games just didn't, I think from a business model standpoint, just didn't scale up.
So there's interest from strategics in basically finding out certain hyper-casual companies.
Sure.
Yeah. And how about you, David? What's your...
In hyper-casual, listen, the question really is, because clearly there's interesting stuff going on there. The question is, at what stage in the evolution of that specific subsector are we? Are we at a bubble stage yet or not? And you might. I mean, listen, I probably see maybe 5 hyper-casual pitches a month coming in. But I can easy out on 90% of those, because they're clearly not going to be interesting. They're not different. But there's another 10% in there that are kind of interesting in my mind. So I don't believe we've begun to scratch the surface of hyper-casual. I think the successes we see right now are going to pale into insignificance compared to the successes we're going to see in the next 4 to 5 years in hyper-casual space.
Interesting.
For sure.
So actually, on that note, just to build on that, You mentioned you see quite a lot of hyper-casual pitches. In general, I want to ask you guys about your investment criteria and what you guys look for. Obviously, the genre must be one, but do you kind of, if you can walk us through, what are the key things that you look for?
Yeah, I'm happy to start on that. So, and the games industry, everybody here is in the games industry, so you have a sense of how in some ways it's different from other industries. But for us, it's a tremendous collision of passion, of capability, and market understanding. And those three things together are, for us, essential. And often we see people with tremendous passion for a particular game or a genre or whatever, and that's fine, but they're lacking the capability to execute against that, or they can execute against it, but the market capability is not there for it. Those three for us need to come together. Ultimately, and then of course you back against that and you look against the team that are going to execute against it and so on. You look about an alignment between what they want to achieve over the next 2 years, 3 years, 5 years, and make sure that you're completely aligned there. We've seen people that I would have loved to invest it in, but we've chosen not to because it's the wrong thing for them. I know that they could drive towards what will be for us a huge success, but I also know that ultimately that's not where they wanted to take the company. So rather than get onto that journey with them and find out that 3 years down the line you're diverging, we say to them, actually, maybe VC is not the best source for your finance.
Sure.
Yeah, on our side, I think we have always said that we don't invest into games. We invest into teams that build games, because in the end, the likelihood of any particular game being a success is actually quite low, right? So you're investing in a team, and we're giving them multiple chances to produce something meaningful. And so actually, I'm going to a little bit of a self-promotional bit right now, but we're investors in Small Giant Games, and I wrote this blog post after they sold where I said, the probability of success is proportional to the team and the cadence, and cadence is the other big one. So you have to operate quickly and efficiently and give yourself multiple chances to produce something meaningful. I think a lot of times we can all, once we invest into a game, get too caught up in an individual game and perfecting it. And guess what happens? You actually miss the window, you take too long, you don't give yourself enough time to be successful with it.
Great. Matteo?
I agree with all of that. I think the challenge is when you invest very early stage like we do, sometimes there's only the team and an idea, and so how do you kind of try to validate all those things? And I think it comes down to how the team articulates those things, if they're very clear about the thesis behind what they want to do and how they're going to validate or change that, and if they have a very clear narrative on how this is going to work out, even if knowing that it can change direction, but knowing exactly what are the milestones, what are the theses, what are the processes to go through, that gives you enough confidence that they can do something about it. So all of that, but also how you lay out a plan and how you articulate that in a convincing way, I think is very important.
And staying on the fundraising, Affan, I want to ask you, are there things that games companies should think about while fundraising as it pertains to like an M&A down the line? Like, what are the things that founders need to be aware of?
I don't know if there's anything specific in gaming versus other sectors. I mean, it's the usual stuff. I just think in gaming what we see is it's really hard what these guys do, and there's not that many of them, right, who are investing in games. So you see a lot of, and it's really hard for strategics as well, because these big guys that we work with, even when they see a Small Giant maybe like a year ago, still didn't know if that was a real thing or not.
Yeah.
So what we see a lot of strategics do is trying to become investors, and either they have set up a fund or they just do it directly. And I think what we see with games companies is they tend towards looking at that strategic capital. But I guess that's probably the biggest thing to watch out for, because how that impacts a strategic sale down the road.
Absolutely. So you guys have all mentioned kind of what you look for in investing in gaming companies. You didn't mention necessarily specific genres, but I kind of want to scratch the surface a little bit on that. Are there genres that you're particularly excited about, or that you wouldn't necessarily look? How do you guys think about
Just
that?
before I come back to that,
Sure.
I mean, just to add to the point you made about what companies should be thinking about when they're thinking ahead to what an M&A transaction might look like down the line. One of the things that we found is that fundraising is not a point in time, right? It's a cadence, a journey. So you do your seed stage, but when you're doing that, you need to be thinking about how things are going to look for your Series A and how they're going to look for Series B, and ultimately how they're going to look for an exit.
Right.
So nobody wants to buy a company, for example, where the value of the assets are going to run out the door on day one. So there are issues to do with ownership stakes and what carries on with the future owner that matter, for example. Right. So not sort of just adding to what you're saying, what I'd say is anybody starting a games company, if you're taking VC funding, then you are going to exit at some stage, or they're going to exit, right? So that has to be part of your story. And I think for us, that as well as building, a world-changing company, which is hugely important, that's where the passion part comes in, there needs to be the market sensibility part as well, which is how do I position myself ultimately for an exit? And I think you need to be thinking about that to an extent almost from day one when you're starting to construct your cap table and you're starting to put in protected provisions and reverse vesting and all of these other things, because they kind of matter to an acquirer at the end of the day as well.
And going back to the genre point, I'd love to hear kind of your guys' collective thoughts on that.
So, and for the number one thing here, which Sean, I think you mentioned, is that the biggest mistake you can make as a games company coming to a VC investor and pitching is to pitch your game, right? Because that's your product, but it's not our product. Our product is you and the organization and company you're building. So we want to be able to see beyond a specific game. So we want to understand what makes you, your organization, your company, the thing you're building, different. Right? What is it that's special about you? What is the thing? And you know what? We don't necessarily need to fully agree with that, but we do want to see what makes you different, because it's a differentiating factor, which will mean that you are not one of the thousands who are okay. You're one in 1,000 that's really great. So that transcends, in my mind, genres. We will, of course, do our analysis on genres. We'll look for where blue ocean is. There are other areas where there are incumbents who own a particular space, in which case, how are you going to compete against those? And that comes down to the market side of things. But the number one thing is thinking about, for us, you are the products. Your company that you're building is the important thing. So talk to us about how you're going to create value in that.
John?
Yeah. On our side, I think the only thing we won't touch is VR/AR, and that's just because of platform dependency and timing of take-up, right? Things that are out of your control. Outside of that, we'll look at most genres, most verticals, most sectors. I also think in the end, there's so many opportunities within gaming. The market is so absolutely massive, and even sectors or genres that you think are kind of played out, there's new twists that can create huge amounts of revenue and growth in them. I remember when Small Giant came and talked about Empires and Puzzles, I was like, oh my gosh, derivative match 3 game, are you kidding me? Like, how can we do this? And they got it completely right, because they had a little bit of an innovative twist on the market and were able to extract huge amounts of revenue and value out of a market that almost everyone would have said is already done with huge established players there. And so, it's in the end, I look for you guys to tell me where we should be investing.
I'll come back to that, because I want to actually do push, because I really wonder if there is a genre in which you're saying, I wish somebody was coming and pitching me more of this.
Yeah, I actually have that. I agree with everything that's been said, but having said that, I'm quite focused on the thesis, so not the game itself, but the game. If you already have a game, it needs to be a first step into a direction, and I need to understand the direction. And for me, what is most exciting these days is what I mentioned before. Like today, everyone in the world, almost everyone has played a game, and so everyone expects interactivity from their entertainment. And so, how do you build on top of that? How do you create experiences that are not maybe necessarily games only, but are at the convergence of different media formats? So, for example, just to give you genre like you're asking, interactive storytelling, interactive TV shows like HQ Trivia kind of things. Also, things that connect the real world with the digital world. So, using AR in interesting ways. I'm not against AR, to be honest. It's when it's AR only, but when you use AR to bridge the gap between the reality and the real world and the digital world, it's interesting. So I'm not going to point out specific games, but for me, the really interesting stuff is where it's what's next. It's not another, mid-core multiplayer game. Sure, if you're a great team, if you're a great unique positioning, we might back it.
Yeah.
But if you ask me, what are you very excited about? The convergence of media. How do you entertain people that don't consider themselves gamers, but are now actually playing a game without knowing? And so that's exciting.
And he's putting his money where his mouth is. I know he's invested in a couple companies in that sector as well.
Yeah, that I'm quite biased. So. Yeah.
And Affan, I want to come to you. We've seen a lot of consolidation in the gaming industry in the last couple of years. And do you expect this trend to continue? And are there certain areas, again, coming back to different verticals, that you expect more kind of exits to happen? We know Playtika is trying to move away from social casino into more casual, for instance. Zynga obviously has been very active. Where do you see this kind of M&A activity to continue?
Look, I think, and I hope this continues, but as of right now, the M&A market is very active. Mm-hmm. You guys know better than me how hard it is to develop, a good quality and successful game, and so all these big guys are struggling for innovation internally. A lot of them haven't launched new games of their own. It's all been M&A, and so I think where they can find studios who've developed even one successful game, we see a lot of interest. I think as far as genres, look, these guys are at the end of the day looking at where they're going to make money, right?
Sure.
So if there's there's been skepticism around Empires and Puzzles. There was skepticism around, Peak is doing Match 3, like that's been there, done that kind of thing, and people continue to prove them wrong, or Moon Active suddenly comes, out of nowhere. So I think at the end of the day, if they see a business that has long-term, potential, both on the retention and monetization, and, one can be harder than the other, I think there's buyers. So I don't see that stopping. I think it'd be great if people like Supercell and King and EA were more active in M&A, and we've lost the crazy Chinese mining companies for now. But there's still we still see a lot of interest. And you're right, it's driven by whether it's the Playtikas of the world trying to get into casual, whether it's people like Zynga doubling down on where they're good at, whether it's people like Nexon buying Pixelberry, or the Netmarble looking at. So I think there's still plenty of buyers looking at these mid-sized companies.
Can I say something? Again, to prove what I was saying before, I think 3, 4, 5 years from now, a new set of acquirers will start to buy games companies, and maybe even sooner. That's my prediction. Maybe I'm wrong, but I see exits to Disney, I see exits to Netflix, I see exits to Comcast. Again, entertainment companies that are failing to engage a new audience because they have linear formats that are not scaling and not failing to engage people. They've innovated on business models with subscriptions, and it's actually interesting that games can learn from that. But from a format perspective, they're lacking something, and I see them coming into the picture soon.
Very interesting.
The only counter I would have to that is, I would have thought that to be the case already, because it's not as if people can't see where the eyeballs are going.
Yeah.
But all the media companies are going the opposite direction, right? Disney's out of games, and they've sold their games assets. Fox is selling their games business right now. Warner's selling their games business. So, we would have hoped to see that these guys are all coming in. And where we are starting to see is maybe people like Amazon after buying Twitch, but more on the PC side, saying, hey, there's some synergies here. At some point, yeah, you would think Netflix, if they're competing with Fortnite, that they should buy games companies. So I hope that's the case in the future, but right now it's going the other
Do you see any interest from Apple, Google, others? I mean, I know they're launching their own subscription platforms now.
Nothing on buying content. No.
I think it will happen. I think Amara's law, we tend to overestimate the impact of something, of the technology in the short term and then underestimate it in the long term. And so I think these companies will come.
I see. Actually, just kind of want to switch gears a little bit and then talk about one of the questions that, the people wanted me to ask you guys is around the timing of a raise. So you had mentioned, David, you don't necessarily invest in a game, and there is a certain point, isn't there, about when you can raise based on the team's track record, and then when you actually have a live product, then it becomes more about traction. What is the right timing to raise in a seed round for a gaming company?
Great question, and I wish there was a simple, great answer to that as well. To what you talked about there is something about that. We talk about traveling in hope and traveling in expectation, right? And when you have nothing, you're traveling in hope. So you can spin a great story and there's no evidence to prove you wrong. Once you have something, then there's expectation, right? People are looking at that and they'll base on that. So that's an argument for saying in some ways going earlier. Yeah. But it depends the stage you work at. We are a very early stage, right? So we have invested on the basis of somebody saying, I'm going to start a company next week. Will you fund me? And we've invested with a bit more than that. Obviously, we discussed what they were going to do, but there was nothing else in place.
Heavy due diligence from LVP.
Exactly. But this was the team that was led by the guy who was running League of Legends, right? What would you do? So clearly, there are. If you have a fantastic track record and you've been doing fantastic things, you've proven your capability, and you have a thesis to develop and own a new subsector, a new area. It's very interesting, right? And we'd be very early. Other times, we need to see more than that, right? We need to see something so that's at least demonstratable, so we can understand better what's going on. So there's no clear answer to that. For us, we like to say there's no too early, because if everything else is right, we will be extremely early. But there is a too late for us, and that just reflects more about the fact that we are early stage and we're just not a later stage VC. So once the cap table fills up and you've raised a round or a couple of rounds, typically for us then the valuation is not where we play, so it wouldn't necessarily work for us. But more importantly, we like to be involved in day one, because we kind of think we know what we're doing. We kind of think that there's advice we can provide, and people often are headed in roughly the right direction, but sometimes a quarter of a degree out along that vector can make a huge difference, like 2 years down the line. So rather than be 2 years down the line and try to have to course correct, we prefer to be there working with people on day one to try to make sure things are on target from day one.
Okay. Sean?
We all invested roughly the same stage, so you're not going to get probably a different answer from Matteo or from me, honestly. Okay. Similar. Love to invest. Can go quite early. Typically an early product. It's not live yet, so there's no metrics. You're swimming in hope and dreams without any data to back it up.
Well, yeah, I think you can do it when, as you said, when you have a great track record. If you don't, then ideally you have a very efficient and interesting way to validate some of your thesis. So you're still very early. There's still something that needs to be built, but you have done some of the initial work, and shows also that you have resources to actually come up with efficient and new ideas to prove what you want to do.
And just to add to that, I think that we're extremely early because we've been in the games industry for a while, so we have individually our thesis about what is interesting and what is investable and what we're looking for. So often, when it's very early, it's because somebody comes along with a track record who's kind of done it before, who is actually talking to a specific thesis we have for investment. So we've almost been looking for somebody great to come along and say, I want to build a company that is going to excel in this specific area.
Mm-hmm. Yeah. And just to kind of also continue, like you guys all see and talk to many gaming companies. Is there a common thread in terms of a blind spot of an early gaming company coming to you and say, here's my team, but you're kind of almost thinking to yourself, well, what about, this role? How have you kind of thought about it? Would love to kind of, Matteo, maybe start with you.
So things that mistakes along in the journey.
Mistakes, but more I was thinking around talent, like, maybe they don't come in with a UA manager hire, or maybe there's a data scientist that's not on the team yet. What are the blind spots that you see as a common thread across the board?
Well, I think it depends on the company and what they're trying to do, and I don't see a common theme. Like sometimes someone lacks the game designer guy, and sometimes they lack the technical guy, or that guy is not too strong. So I wouldn't generalize. I think for me, the main mistake that I see at a very early stage is the minute they close the round, and they have the money in the bank, they should start focusing on the next round and on the milestones they need to hit. Like they tend to forget that in 18 months or whatever, they're going to have to raise another round. And even if the thesis is amazing, the vision is perfect, the direction is good, and the traction is okay, they're not thinking about what the company will need to look like in 18 months, and which also means the team. So what are the key people we need to have? We'll probably lack someone, and different companies will lack different people at the very beginning, but where the understanding what the team and the company and the product needs to look like in 18 months, or actually even sooner, to raise the next round is quite often a mistake. People forget about that.
You guys have?
Yeah, no, I mean, 8,000%. Is that possible to agree 8,000% with something? Because I think that's 100% right. I would only add to that. I think a lot of the games companies that we meet are truly, they do it because, the founders do it because they're truly passionate about games, and they're incredibly creative, artistic people. And, I think in the brutal hard light of day, games is incredibly A/B testing, quantitative, spend money here, generate this return. And so, to see the really strong, whether it's UA or analytics person in the team from the early days, I think it can only instill confidence from an investor perspective, because otherwise, passion is great, and you have to have the passion, but you have to complement that with a really deep, quantitative team.
Yeah, and just, what I was going to say initially was a product manager, and really, that what you've been saying kind of reaffirms that. It's someone who can join the creative passion to the marketing side of things, and it's someone who can really own that specific role. It's easy to get started with something, but, that the high quality problem occurs when you have something that looks like it could be a great success, right? And then managing the product through that is challenging if you don't have strong product management in place.
Great. How do you guys, I'm really actually curious about this, because we so far talked about how you guys interact with gaming companies, what you look for, etc. I would love to ask you how you interact with your LPs, especially the conversations when you're about to raise a fund around, I'm sure you must get this pushback as like games is a hit-driven business. Like, what do some of those conversations look like? And Sean, I also want to ask you specifically around, because you guys invest in games, but also other verticals, what's the kind of internal conversations in the fund around games being a hit-driven business, or,
Yes, games is a hits-driven business, absolutely 100%. But if you've got a hit, so is venture capital. It's a hits-driven business as well. That's what we do. Is we invest in 25 companies, of which 2 to 3 can each pay back the entire fund. That's the nature of what we tend to do. We've always said from the very beginning, we invest into businesses that use technology to fix broken customer experiences and games, because games doesn't really fit within that description. From our perspective, we look across Europe, and if you look at where value has been created, and Affan knows this because he does this on a daily basis, in the European tech ecosystem, games is disproportionately a incredibly high percentage of that, whether it's King or Supercell, or maybe Minecraft is not necessarily venture-backed, but is a games company coming out of Europe. So you can't ignore the game space in Europe. It is a huge amount of return available for investors. And so, we just explain to our LPs, we say it's going to be a portion of what we do, and we will invest in teams, not games. And it's okay. It works.
I mean, I would love to hear some of the common pushback the LPs would.
No, but I think we've spoken about it. It's right. It's right. How can you assess a game when it's not live yet? It's surely this is just hits driven, and weren't you just lucky investing into that company? And the biggest question we get is how do you replicate that? So how can you know again when you're making your 3-4 new games investments in this new fund that you're going to be able to get lucky again and find another great games company?
David, I'd love to hear your thoughts.
Yeah, I mean, and listen, it depends on who you. Well, as a VC, right? There's only three things you do: you raise money, you deploy money, and then you help grow the companies you deployed against. But the raising capital part of it is a big part of it, and that's your LPs, your limited partners who put money in. I mean, ours are a mix of strategic and institutional. So the strategic guys are people who know the game sector or know the media sector, so they're a lot easier to work with because they get it and they understand what we're doing. For the institutional ones, and we have some of our investors we have a German pension fund, right? And it's interesting when we speak to them about the game sector, and we were lucky because they just thought it was interesting and wanted exposure to it. But yeah, you can get pushback from LPs, or when you go out to them first of all. And it's easy. First of all, you just show the trajectory, you show the growth of the games industry or the media industry generally, how it's been tracking over the last 10, 15 years, and how it's projected to track over the next 10 to 15 years. So it's a huge, huge sector. Media generally, you break media down, you show that games is the one that's got double-digit revenue growth. So we know the revenues are there. And then for us, it's like, okay, if you want exposure to that, where's the exposure going to come? Are you going to get it through public markets? And the answer is no, because there's only a limited number of public games companies, and actually once you get to that level, most of the value has already been generated. So the value generation in the games industry happens privately, and it's a huge industry. How are you going to exposure to the private side of the industry in the games industry? It has to be through a VC fund, because it's the only way that you get a portfolio approach to it. So if you step through it in terms of economic rationale, it makes perfect sense. The people who are still listening at the end of that.
Yep.
I think it's also important to make them understand that freemium games are different. Like I think what enabled VC investment was the freemium model, and especially mobile, because it's a process. You open your gates, you have users coming in, you analyze what they do, you can change things over time, and so. That once you start explaining what's the difference between a freemium game and a premium box game, in a store, that they might get it. And the other thing I would say is, I don't think I think there is a broader ecosystem that they need to understand. People have more free time these days, and so that time needs to be monetized, and other forms of entertainment are failing to monetize that free time, and so if you want to have access to that pool of money, you need to back games companies or interactive entertainment companies.
Interesting. Last two questions, then I want to actually leave some time for the audience. Affan, Sean mentioned, and Sean has been doing a much better moderating job than I am, but he has mentioned there's something special happening in Europe when it comes to games. You have seen, obviously, and advised many of these companies, and you also know from the street. What do you think is the reason behind the success stories that we're seeing in Europe? Is it true that Europe is kind of punching above its weight when it comes to games, and if so, what's the reason?
Yeah, look, it's easy to say there might be the cold up in Helsinki or something, but it is punching above its weight because, maybe the talent that's required in the games business is different than when Silicon Valley got started with semiconductors and whatever else, right? But I think there's an ecosystem which has been created. The games companies haven't set up like SaaS companies, and as soon as they got to a certain scale, said, okay, now let's move to the U.S. They've stayed here, so you've had King, Supercell, etc. And all these Supercell and all the Kings, they come from the digital chocolates of the world and whatnot. So people have stayed and continued to build, and so it's created an ecosystem which I think in other sectors which Sean invests in probably isn't as strong. You also have European buyers, which in other software, other tech, parts that we don't have as much. So again, there's that talent kind of stays here and regenerates. So if anything, our buyers from the West Coast are much more interested in buying companies here than on the West Coast, which we don't see in like a software, for example. So I think it's just there's been an ecosystem in games, which hasn't been in other sectors of tech. And now I think it's vibrant enough where you have, different pockets, whether it's Istanbul or Barcelona or Berlin, London, obviously, Helsinki. There's enough scale. In fact, I think it's much more than the West Coast, where you're not seeing that much.
Can I add to that as well? It's not my theory. I stole it from Trip Hawkins because I met him when he was raising money for his new studio, Electronic Arts co-founder, a number of years ago. And I said, what are you doing? Why are you coming to London to build a game studio when you know everyone on the West Coast? And he actually, I can say this as an American, he said he'd rather have Europeans build games because only in Europe can you study 13th century medieval literature and not get laughed out of the room. And in the US, if you try to tell your parents you're going to university to study 13th century medieval literature, they would think you're absolutely insane. In Europe, there's still the scope and the opportunity to do that. And I think that's just a point example of kind of the broader ability to do fun, creative things and learn those things, and then bring that creative side into games as well. So I think that could be part of it.
Okay, last question, and this is about the one that got away. So I'm sure you guys must have, one company that you, looking back, you say, I wish
Everybody can't say Supercell or whatever.
Yeah,
Sure.
So was Matteo. So they're both in it. So I was in probably the same fundraising trip, and I remember sitting across the room from Ilka going, "Facebook games, no thanks," when they were launching Gunshine, and it was not a great.
But by the way, that's another counter-argument to it-driven business. Most of these successful companies have tried and failed in different categories before finding their hit. But they had enough shots at the goal, and that's the whole point. You back people that can generate at least 3 or 4 shots at the goal, and that starts to be a bit more reliable.
Sure.
Anyway.
So who's the one that got away for you? I mean, you have to have seen, I guess the pitch is the qualifier, I will add, but...
Yeah, so this is not something I've seen as an investor, but when I was at Google Play, and it's actually Small Giant Games, I wouldn't have invested when I saw it. I actually featured it on the store when I was leading the games team for Europe, but I thought it was a very interesting, well-executed, solid game. I never expected to be that successful, and I wouldn't have invested, so chapeau.
Yeah, we invested in 2 games before that, so we didn't...
Again, same thesis.
Yeah. So the one was the Flying Bird game didn't work out. I forgot.
David,
Yeah.
Listen, a number, right? Space Ape early on, because when they first started, they were doing kind of gambling games, and we couldn't do that, and we just didn't follow them enough, and they pivoted and were a good success. But they're great people in terms of how they think about developing games. I'd love to be involved with them. Small Giant, saw them several times. Saw them in 2014, right, early on. And I've got to say, actually, in 2014, I think I might have done it, but not everybody in the team thought that was the case, and largely because the economics, the price wasn't right for us. And that's something that I've learned, that the price on day one is not necessarily the most important thing. And then in 2016 saw them again. By then the price was far too high for where we were as an early stage seed company. But look at what they've done, right? I wish we'd been in them.
Great. Thanks everyone. And then I want to give the chance to our audience to ask any questions.
Thank you very much for your insights. Very enjoyable to hear. The one thing that I'm sure I speak for everyone who's tried to raise money in this room, is it's one thing having an idea, it's one thing getting your pitch correct, it's one thing proving your concept, whatever. But it's an entirely different thing being able to talk to you, being able to find a private investor, being able to find a VC who'll respond to your phone call, your email. How do we do it?
Well, I mean, events like this are great, of course, and warm intros always work well. If you know somebody that has been successful, that knows us, that's the best. We get, I mean, I'm sure like you guys as well. You can contact us through the websites and stuff like that. There's addresses there that's sent to us. Here's the brutal reality of it. We get so much incoming through that, and it's not always of as high a quality. So if you can get face to face, it's always a better way of doing it. In terms of, is it a hurdle? It's a hurdle, but building a business is going to be a hurdle as well, right? So it's almost, I'm hesitant. It's not true to say that it's a barrier that we want you to overcome, because it's friction, and that would be better if it wasn't there. Having said that, if you do manage to overcome it, it shows a level of diligence and capability and doggedness and determinedness that you are going to need along that journey.
Absolutely. I mean, for me, if you have someone, maybe even checking on LinkedIn connections and stuff like that, when I get introduced by someone I know that I value, I always take the first meeting, even if I'm not that interested on the surface. While if it arrives through other channels, it had better be very, very special to catch our attention, just because of the volume of inflow that we get.
And just on that as well, it's like, because there is such volume of incoming, it's almost not obviously the specific thing you're doing, it could have huge value, but ultimately it's a competition. And there might be a bunch of others that are slightly, or maybe of the same value, but talk to a specific thesis we have. So often it's the case that, what works for us as a VC, what doesn't work, may well work perfectly well for somebody else. Often it's not a comment on what you're doing. There's still great value. It just doesn't fit our specific thesis.
The other thing I was going to say, and maybe this is wrong given that three of us are investors, I'm not sure if I was setting up a game studio, I would necessarily raise money from VCs as well. Because I think it does put you on a certain path that might not be right for every single company, right? The one thing we know about games companies, if you get it right, you can get quite profitable very quickly, but then you get the questions about how big of an opportunity it can become, the long-term equity value. I know many founders that run highly profitable game studios and have a fucking great life. Like the money that these things print is absolutely fantastic. The problem, you get one of us, we start going great, and then we're raising money again. Is it an up round? How can we sell? Have you met Affan? We got to think about selling the company. I'm not sure I'd want that. Yes, there's the initial hurdle of getting up and building the team and launching a product and getting that kind of that circle turning, but it can be great. And I always counsel people to say, raising venture is not for every single company out there. And you should really think long and hard about whether you want to take our money or not.
100% agree. If you are raising money from a VC, that when you close that deal, that's not the end. That's the beginning, and you have to be ready for that. Because that journey is something that the VC wants to join you on. And if you're right for it and it's the right VC for you, they'll be pushing you, they'll be challenging you, and vice versa. The great entrepreneurs that we work with challenge us. They want our time, they want our involvement, they want to be engaged with us. So I'd say that if what you want is the money, and then Mr. Investor, please go away and let us do it, probably VC money is not the right source for you.
My name's Frank. I'm one of the indie developers in the other room. I guess this is addressed to David, but obviously I want all your feedback on this. What would you suggest to someone who makes a pitch to VCs and then fails? What would your next steps be? And does that mean the relationship with that firm is done, there's no second chances? Just sort of talk about that. Thank you.
And great question, right? And I think fundraising, as I said before, it's not a point in time. It's a journey. And I think engagement with the VC, again, is rarely a point in time. It's a journey. And where possible, if someone pitches to us, we will try to give constructive feedback, if we engage with them. And if we can't directly engage at that time, or we feel somebody else might be able to, we'll try to indicate that. Or it might well be that we'll give different pointers and we'd love to see you again in 6 months' time or a year's time. And it may still be the same thing, that it doesn't quite work with us here. But and again, as I've talked with many people here, if you're an entrepreneur looking for funding from a VC, be aware that it's a long journey. You'll be working together for a long time. Making sure that you can work with them is hugely important, and vice versa.
Yeah, and I think if possible, it's better to engage with investors not like 2 weeks before you need to close the round. If building that relationship, sharing maybe if you have a connection, sharing an idea, I would like to do this and that, and I'm thinking about partnering with this person or whatnot, and getting feedback, building that relationship so that when you actually have something to pitch, you already know each other and you're talking the same language.
I have a question. As investors, I think you're looking for a good team, with resilient market potential, and they're really passionate about what they're doing. But then in the meantime, you don't always take risk. I wouldn't think. I mean, you were saying that lack of data, lack of historical analysis. What do you go about it? What kind of trick do you have in order to spot them?
I'm not sure I would necessarily agree that we don't take risk, right? So, being a VC is really interesting, right? Because when you look at the numbers that we play with, I think we have to expect that 60% at least of our investments are going to fail entirely, right? And maybe another 20% will perhaps return what we put in, and the other 20% maybe will make a lot more. So when you go into making an investment and engaging with an entrepreneur, you're in this bizarre situation of holding two truths at the same time. The one truth is you absolutely have to share their passion and belief. Right, so you have to believe that these guys are going to hit it out of the park. They're going to be absolute superstars. That's one truth. Balanced against another truth, which is the knowledge that actually more than 50% chance they're going to fail entirely. So that's the game that we're playing, and we try to bring to bear everything we can to sort of build up our confidence, a conviction that this team can be successful and we can help that team be successful. So track record is one of the things that features in that. It's one of the things. There are a number of other things that factor in there as well, like what else has this person done in the past? Do they talk to a specific subsector that matches a thesis we're after? Are they fantastic at networking? Can they get out there and beat down doors? All these sorts of things matter. And for us as seed stage guys, one of the things we're looking for is not just can they raise money from us, from LVP. We're also thinking about if they're successful and they go on and they want to raise a Series A round, can they raise money from Kleiner or Andreessen Horowitz or Sequoia or these guys, and so you need to be able to see that entrepreneur can be disciplined in developing their capabilities as well. There's a whole range of things that matter. Do we take risks in terms of betting on things that we don't believe we understand? No, we don't. We have to believe something because we have to have that passion as well.
And I think sometimes, in many cases, we pass not because it's too risky, but because it's not ambitious enough. So sometimes, a big mistake would be to go and be cautious so that, you're thinking that we're risk adverse. But actually, yes, we want to have some confidence that there is a chance that you can make it, but you have to really aim high. And in a way, what we discussed, like we invest in 20, 25 companies. For you, it's only one shot. So yes, we're taking less risk than you on that specific venture. But that venture might need to repay the whole fund. So it needs to aim high.
Great. Guys, thank you very much for coming and listening. Thank you very much I hope you guys enjoyed it as well. Yeah, great.